Hey, Fluffy Trades! I want to do a video analysis update of the growth sector. We're going to talk about the high beta, high risk, high return opportunities that I see from clean energy to crypto. So we'll start with Tesla. It forms a wave one from the 2019 low all the way up to February of 2021. I suspect it ended a wave two in May of 2021. So above that low of 539, this is a wave one and an ABC wave two at the 78.6% fib. So the length of wave one placed at the wave two low gives a minimum wave three target of about 1319 before a shallow wave four and a wave five higher. So if wave four retests the wave one high and wave five is the length of wave one placed at the wave four low, there is a path above 539 that can take Tesla up to the 1900s if it gets going. We've seen Tesla all over the bar chart, straddle, and strangle screener, and that doesn't guarantee anything, but Tesla was on that screener before both of these rallies, which helped me to predict the move. That doesn't mean it's going to work again. So what would happen? Tesla's about, let's say, $160 away from 539. So what would happen if Tesla broke that low? Would it be bag holder, bag holder, bag holder? I'm not sure. If Tesla did break that low, just to kind of play around a little bit, I don't think it would be the end of the world. We see a lot of these, especially the fact that Tesla's in XLY. Tesla's kind of with the stock market right now. And I think that there's a lot of evidence from even just kind of the whole financial sector, the consumer discretionary sector, and the tech sector. We have a lot of these ABC corrections that are ending. So I don't think it would be the end of the world if 539 did go in the long term. But that would take away the downside risk level that Tesla's currently offering. And some of these growth stocks don't have a downside level to trade against. So it looks like the institutions are managing that downside risk with option straddles as they were before some of these rallies. If we look at the long straddle, long strangle right now, I expect that we'll see Tesla all over this. I haven't looked at it today, but yeah, Tesla, Amazon, Nvidia, Apple, we have all the big tech. So again, it doesn't guarantee anything, but I do think that we're going to see a massive move in big tech, and I think Tesla's going to join that. So there's a lot of supporting evidence for Tesla from the clean energy sector and the rest of the growth sector that I'll go over. But I think that one that I'll kind of include in this video from the tech sector is Nvidia. Kind of reminds me of Tesla's kind of opportunity right now. Very likely these two are going to move together. And I think that Nvidia forms this massive wave one from 31 to 346. And I think it too is another ABC correction, ending right around the 50 to 61.8% fib. So I think there's supporting evidence for Tesla from not only the clean energy sector, but also the big tech sector. If we look at in-phase energy right now, this falls into the clean energy evidence. One of the biggest holdings of a lot of the clean energy ETFs. So I'm using a lot of the downside risk management for clean energy with these straddles on ICLN that I covered in my more recent video. But I think that this is a big wave one for in-phase energy and a wave two that has ended at this low right here around 113. I think from this low, in-phase energy forms another wave one and another wave two. And it's going to go on a wave three up to the 161.8% extension of about 287. So right now, maybe a little further level than Tesla above 539 would be in-phase energy above 128 for a little wider kind of holistic view of clean energy. If we look at First Solar right now, I think that there's loads of evidence to get from this chart that this is a 10-year possible nest, what the classical traders will call a base. Of course, they're going to wait for 123 to get broken to do that, but I think that part of the growth is that the downside volatility has to be taken advantage of, and I think this is a wave one and a wave two. I think this is another wave one and another wave two, and what First Solar did that I thought was pretty important was it went and it broke above both of these wave one highs. I think that supports the idea that this is years of accumulation for First Solar. I think this is a wave one and a wave two at the 61.8% fib, so above 48. There's nice risk reward right now. The length of wave one placed at the wave two low, as well as the 161.8% extension gives a wave three target of about 154 to 181. I don't think that would be the end of the road. That would end wave three. We'd have a shallow wave four and a wave five higher, ultimately taking FSLR up to 200. And because of kind of how large this cycle is, even in the big picture, First Solar getting to 200, I don't think that ends the world, or that would end the rally. Here is NEO. I think that we've seen kind of the Chinese market decouple itself from America for a little bit, and I think there was kind of a far-fetched idea that growth in Chinese stocks would in the future be diversification opportunities, but we can certainly see that occur. I think for NEO, this is a big wave 1 and an ABC wave 2 at the 78.6% fib and above 11.67. I do think that it might be worth saying if that's the low, if that's the wave 2 low, then that's the risk. The upside reward is pretty substantial from an Elliott wave perspective. The length of wave 1 placed at the wave 2 low can take NEO all the way up to 77 before a shallow wave 4 and a wave 5 higher. I think there's a lot of evidence for NEO from Xpeng and Lee. One thing that I wanted to do for NEO is kind of point out that we're going to talk about some stocks later in this video. They've broken this IPO low. And I think NEO is a good example of, just because a stock breaks the IPO low, that doesn't mean that it's guaranteed to be in a bear market forever. I think that a lot of wave theorists, when they're dealing with more recent IPO stocks, they'll just kind of acknowledge that they don't have that chart history, and they'll have wave 1 start at 0. So I think NEO is an example of, just because the IPO low gets broken, for a recent IPO that can occur. So there is NEO. Here is Lee. Lee, we got a little bit of evidence from in the clean energy sector. I think that this is a big wave 1 and a wave 2, and what it could be doing right now is that it's within a large wave 3 on the big degree, and on the smaller degree it could also be within a wave 3. I think from this low, Lee forms a wave 1 from 15 to 37 and ends wave 2 at the 78.6% fib. I think there's a good chance it's within wave 3 of wave 3 right now. I'm not really interested in chasing Lee, but I think ultimately this wave 3 in blue ends at the 161.8% extension, which is around 50. Do I have XPEV next? Yes, I do. So I think XPEV is kind of poised to play follow the leader to Lee. I would expect that at least. And I think that this is a wave 1 and a wave 2. So I own both Lee and XPEV. I took a half position in both. I think XPEV was at 29. Lee was around 22, 23. But I think this is a wave 1 and a wave 2. And then from this low, we could see possibly that, like Lee, some of these Chinese stocks are kind of making it look like from the low that occurred in March, they form a small wave 1 and a small wave 2. And I think that Lee's kind of broken above this wave 1 high. Now I think XPEV has broken above this wave 1 high. I think Alibaba's pretty close to doing it too. We could be within wave 3 on a small degree, but also within wave 3 on a large degree. And I wouldn't be surprised if the next time Lee gets ready to go to 50 and challenge its wave 1 high, if we've seen XPEV and NEO play catch up to Lee recently. So here's Plug Power, here's Sonova Energy. These two, Sonova I think has a downside level, but Plug Power has lost its downside level to trade against, and that's occurred for some of these. So this would be a good example of a stock that I'm using the ICLN straddles to hedge with. This is actually in ICLN, but I think this is a wave 1 and an ABC wave 2 for Plug Power at the 78.6% fib. The length of wave 1 placed at the wave 2 low can kind of give that moon boy count that we're seeing across some of the solar energy stocks that have gone deeper to the 78.6% fib. But recall what we just talked about with First Solar. This could be years and years of accumulation in the solar sector, and Plug Power could certainly be one of them. I think this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low can take Plug in the big picture all the way up to 86. The problem with Plug is that there's not really a level to trade against. Some traders don't like just using the most recent low, but if I had to pick one, it would be 12.70. But I will be managing downside risk in stocks like Plug Power with small position sizes, but also the ICLN straddle. So here's Sonova Energy. I kind of like this one. It's kind of similar to some of the other small cap solar stocks. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2, where the length of wave A placed at the wave B high is where wave C ends at the 78.6% fib. I think with the evidence from First Solar and Enphase Energy, this could be an interesting one. And there is a nice level to be above 12.47. The length of wave 1 placed at the wave 2 low says, hey, wave 2 is already in. A wave 3 could go into the 60s in the big picture, but that's kind of bearing the lead. If we saw any of these stocks in the future go break above this February 2021 high, these would be basically recent IPO bases, and there's no telling what that could mean in the long term. And I think that the title of this video is, are these stocks kind of like tech possibly in 2009, where they could be getting ready for a multiple year run. I think we're getting that look from China, and I think some of the small cap stocks could be a ways to get exposure to that without using a lot of money. And if we just look at the price overview for Workhorse, I think it's something to kind of remember about this sector. These stocks have extremely high beta. So you can see the 60-month beta right here. Workhorse's beta is 3, basically 2.94. That means the stock is 3 times more volatile than the S&P 500. So, when you see traders say, hey, I have a 10% trailing stop, maybe that works for the S&P 500, but if that's compensated for beta, then on a stock like Workhorse, that's a 30% trailing stop. So for me, there's a lot of volatility in this sector, and that's, to me, is a sign that if I'm going to invest in Workhorse, I don't take a bigger position than I would for the S&P 500. I take a much smaller position, and that beta kind of quantifies, that I'm investing about a third as much as I would in SPY. So here is Workhorse. I think it's a 1, 2, 3, 4, 5 wave 1, and this is a wave 2. This could be the left side of the base, and we're going to talk about Vivo Power in a second. Kind of a similar look where some of these small cap solar stocks just going and breaking the wave 1 high would be, thousands of % of return. But from an LA Wave perspective, that wouldn't be, where it stops. So the idea is that they're making this really difficult, really getting everyone out, but also absorbing all the supply because, something that would sound ridiculous going beyond this wave 1 high in the future could occur. But I think for, a lot of the small cap clean energy stocks and even some of the small cap growth stocks, I'll try to make the case in this video that it may be worth asking if that is going to be what plays out. So I think Workhorse, there's certainly no downside level right now. I think 1.31, even that is half of the current price. So position sizing really the only way to manage risk with a stock like Workhorse. But I do think then the bigger picture, it could go above this wave 1 high and even beyond this wave 1 high for a large wave 3. So that's Workhorse. Here's Vivo Power, a pretty similar idea. It's a 1, 2, 3, 4, 5 waves impulse to make a large wave 1. I think this is an ABC correction ending a wave 2, and it's another one almost identical to Workhorse, where just going above the wave 1 high is a several thousand% return. But that wouldn't even be where wave 3 ends. That's usually the minimum expectation for wave 3, is that it's the length of wave 1 placed at the wave 2 low. So for Vivo Power, very similar to Workhorse, 59 cents, isn't really a reasonable low to use, but it's got this, even if some of these trade against zero, that's $1.47 per share loss, and, $24, $25 from a risk reward perspective. Some of these, tickers that we'll go over are a little asymmetric. So here is Alibaba. I think that there's a lot of evidence that China's going to do well, not just from the clean energy stocks, or not just even from the past week or so. We'll talk about the Hong Seng in a second. But I think Alibaba, NetEase, Tencent, they're all going to be trading together, most likely moving together. I think for Alibaba, this is a 1, 2, 3, 4, 5 wave 1. I think this is an ABC correction wave 2 at the 78.6% fib. So I bought Alibaba around 165, and I'm going to keep holding it forever, because I think that this could be, possibly, my opinion, is that a lot of these e-commerce stocks could be tech in 2009, where this is that 2008 moment, but this is all wave 1 and wave 2. The length of wave 1 placed at the wave 2 low says that if these stocks are tech in 2009, Alibaba might be the Amazon. So that's how I positioned the length of wave 1 placed at the wave 2 low. Would be a minimum wave 3 target is that Alibaba goes above 336 before a shallow wave 4 and a wave 5 higher. So I'm in Baba, I'm in Lee, I'm in XPEV for the long haul. Here is NetEase. NetEase is a huge part of my Alibaba analysis. I think this is a wave 1 and a wave 2 on the all-time chart, but the most clear view of NetEase that looks pretty good is that from this low in 2018, that's a pretty clean 1, 2, 3, 4, 5 waves impulse to complete a wave 1. I think this is an ABC wave 2. And the 61.8% fib, the 78.6% fib is 57. That's pretty wide. A little tighter would be 68, but the length of wave 1 placed at the wave 2 low says NetEase could be big evidence for China going to a wave 3 of at least 166 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low says, all in all, the big picture count could take NetEase all the way up to the 230s to complete this black wave 3 before a pretty long period of consolidation for wave 4. Here is Tiger Fintech. I believe this is a Chinese fintech stock, but it's one of those extremely high risk ones. But I think that we'll talk about a couple that look like these. It's kind of that Nano-Dimension look, 1, 2, 3, 4, 5, wave 1, right? And it's just too crazy that this deep ABC correction could be ending a wave 2 before a multi-year rally. And it's really hard to, the multi-year bull market and growth that's not going to be forecasted in advance. They're not going to put that on the Bloomberg front page. Hey, this is the bottom in growth. This is the day that, it's MasterCard in 2009, it's Amazon in 2009, it's Google in 2009. No one's going to put a headline out there. But I think for some of these, if, risk is managed with position size, the reward is certainly there. And I think that a stock like Tiger really illustrates that. Wave 1, A, B, C, Wave 2, where the length of A places Wave B high, could be where Wave C ends. So pretty tight for something with a real high beta is that low of 2.68. The length of Wave 1 placed at the Wave 2 low could take Tiger to about 39. And just like a couple of the other ones in the clean energy sector, usually Wave 3 goes beyond the Wave 1 high, but even getting to the Wave 1 high, even challenging the Wave 1 high, is a multiple 1,000% return. So here is Salesforce in the software sector. Let's see what Salesforce's beta is. So Salesforce's beta isn't that high. So only 16% more volatile than the S&P. If we look at Salesforce right now, I swore I had this all marked up. But that's okay. I know what I was going to say anyway. I think from the 2018 low, this is a large Wave 1 for Salesforce, and this is an ABC Wave 2 at the 78.6% fib. So I think this is a 1, 2, 3, 4, 5 waves impulse for Salesforce. I think it's ending Wave 2 at 100 at the 78.6% fib of 156. And I think from the 2018 low, it looks something like this. That's Wave 1. This is Wave 2. And then this is Waves 3, 4, and 5. So pretty clear 5 waves subdivision in my opinion. And we're going to see that was a Wave 4 that retested the Wave 1 high. That was a Wave 5 that was the length of Wave 1 placed at the Wave 4 low. Now an ABC correction ending at 156 for CRM. I think this is Wave 1. This is Wave 2. The length of Wave 1 placed at the Wave 2 low can take Salesforce all the way to 352 before a shallow Wave 4 and a Wave 5 higher. So I think that there is a little bit of a crossover when, we start talking about possibly evidence for Alibaba, possibly evidence for, Li Auto and the Chinese sector that, a lot of the Chinese stocks, they are growth stocks. So is it, really possible that Alibaba could begin a multiple year bull run without Salesforce, without, some American software names? It's certainly possible. I don't think it's too likely. I think this is a Wave 1 and a Wave 2. The length of Wave 1 placed at the Wave 2 low can take Salesforce all the way to 352. I think I meant to do the Hang Seng when I was talking about China. So let me do that real quick. I think that, there's a lot of global markets, emerging market ETFs that kind of support, not just the idea of being bullish the indices, but being bullish kind of some of these foreign growth stocks. And foreign growth stocks aren't obviously going to rally without American growth stocks. I think this is a 1, 2, 3, 4, 5 Wave 1 for the Hang Seng and an ABC correction Wave 2 at the 61.8% retracement, where the length of Wave A placed at the Wave B high is where Wave C ends. So if Wave 3 is the length of Wave 1 placed at the Wave 2 low, the Hang Seng could have begun a large bull market to about 40,000 for a minimum Wave 3 target before a shallow Wave 4 and a Wave 5 higher. So I wanted to get the Hang Seng in there. Here is SEC Limited. This is one of those that had a massive rally, and now we're at the 78.6% fib. So it went from being, the next big thing since sliced bread to now it's a huge scam. And I think that this Wave 3 could begin the next best thing since sliced bread phase. I think this is a 1, 2, 3, 4, 5 Wave 1 and an ABC Wave 2 for SE at the 78.6% fib. I think this is clearly 5 waves. I think it's clearly impulsive, and I think the 78.6% fib is where a Wave 2 can end. And we're kind of seeing this across the software sector that, not to be grandiose, but when it does occur, it's, going to be somewhat breathtaking possibly that a stock like SE could hold above 54, which is a little tight. I think a little wider would be these lows, about 35. So that would be extremely wide, and that's where, position sizing would come in. But I think there's a good chance that this is Wave 1, Wave 2 will end, and a Wave 3 will go beyond 372. So I don't talk about SE too much, but I want to get into the software sector. Here's Roku, another software stock. I think that this is a 1, 2, 3, 4, 5 waves impulse, and kind of just like SE, it's a Wave 2 that's ending at the 78.6% fib. So Roku doesn't really have a useful low to trade against, probably besides this low right here of 58. I think this is a 1, 2, 3, 4, 5 clear 5-wave subdivision in wave 1. Now he can end this kind of, pretty devastating wave 2, but also a pretty important wave 2 that, for a lot of these stocks could mark a tech in 2009, a Netflix in 2011 type of low where a multiple year run begins. And, I know they've told us that inflation, is real bad for growth stocks, but what we could see is that, we wake up in a world a few years from now where everything is a lot more expensive. And we see, looking back, that the best way to kind of get exposure from that and protection from that was with, growth stocks that had the potential to have a zero added to their current price. I think for Roku, for all of these, just getting above the wave 1 high is a minimum expectation. Ultimately, I would expect that Roku goes beyond 490 for wave 3 before a shallow wave 4 and a wave 5 higher. Here is Netflix. It's another streaming stock. It did go break this low of 463. I think in the all-time count, we can see that this is a 1, 2, 3, 4, 5 waves impulse for Netflix. Now, the ABC correction ending at the 61.8 to 78.6% fib. I think 151 is pretty tight, but I do think that we're going to see Netflix kind of turn around with the streaming sector. I think it's unlikely that Roku and Netflix, even though we're told their competitors will rally without each other. I think we're going to see for some of these stocks that don't really have useful levels to trade against, a wave 1 and a wave 2 develop, where we can see a 1, 2, 3, 4, 5 waves impulse develop for wave 1, and then there would be an opportunity to buy the wave 2 against the wave 1 low for waves 3, 4, and 5 higher. But I do think that we're going to see, just like Roku, that ultimately the wave 1 high for Netflix of 700 getting broken would be a minimum expectation for wave 3. We go beyond the wave 1 high before a shallow wave 4 and a wave 5 higher. Here is Datadog in this kind of software, kind of Cathy Wood sector. I think this is a pretty clear 1, 2, 3, 4, 5 waves impulse for wave 1 and ABC wave 2. And then from this low, Datadog forms another wave 1, and now it's ending in the ABC wave 2. So this actually has one of the more useful invalidations in the growth sector. If Datadog breaks below 69, this isn't another wave 1 and another wave 2, but I suspect that it is. And we're going to begin wave 3 of wave 3. The length of wave 1 placed at the wave 2 low can take Datadog all the way up to 210, even beyond 210 for wave 3, before a shallow wave 4 and a wave 5 higher. So how high is the reward possibly in growth? Well, I think Datadog does a really good job of defining the risk of 69 and above 69. What could happen? Well, this could be wave 1 and wave 2. This could be a wave 3 that is at least the length of wave 1 placed at the wave 2 low. So we could see it go beyond 210. Before a shallow wave 4, the retest the wave 1 high, and then if wave 5 is the length of wave 1 placed the wave 4 low, we could see possibly Datadog go all the way to the 300. So there's a lot of reward above 69, and then 69 is where that downside risk is defined. Here is Cloudflare, kind of similar to Netflix. There's not really a useful low to trade against. It's right, below the 78.6% fib, but I think this is a 1, 2, 3, 4, 5 wave 1, and an ABC wave 2. The length of wave 1 places the wave 2 low. Says it's going to be hard to define the downside risk, but the upside reward can take Cloudflare all the way up to 245, even beyond 245 for wave 3, before a shallow wave 4 and a wave 5 higher. Cloudflare, Datadog, probably Fastly, all likely to move together. Here is Facebook. We'll talk about some of these social media stocks. So Facebook kind of reminds me of Salesforce in that it forms a 1, 2, 3, 4, 5 waves impulse from the 2018 low. 1, 2, 3, 4, 5 waves. I think now this is an ABC correction, ending at the 78.6% fib. Above 137 is a nice level to be above. Extremely wide would be 123, but the length of wave 1 plays at the wave 2 low can take Facebook all the way up to the 400s, even 419 for wave 3, before a shallow wave 4 and a wave 5 higher. This is kind of a like Tesla one where, it's not just the growth stock, it's also a big tech stock. I think this could be a really useful chart for not just growth bulls, but also tech bulls in the future. I think that Twitter, very likely to move with Facebook in the SOCL ETF. This is a 1, 2, 3, 4, 5 wave 1 for Twitter, and an ABC wave 2 at the 78.6% fib. A little tight would be this small wave 2 low of 28. Above that level, the length of wave 1 placed at the wave 2 low can take Twitter all the way up to 92 for wave 3. before a shallow wave 4 and a wave 5 higher. I think I meant to do Snap next, but we'll skip to PayPal and Square first. PayPal, actually we'll do Snap to get it right after Twitter and Facebook, but I think Snap forms a 1, 2, 3, 4, 5 waves impulse from this low. Now it's ending wave 2 at the 78.6% fib. It's probably one where there's not really a useful level to trade against. 7.89 isn't too bad. This small degree wave 2 low, but I think it's another one where, surprise, surprise, from the 2018 low, 1, 2, 3, 4, 5 waves. Now ABC correction ending wave 2 at the 78.6% fib. The length of wave 1 places the wave 2 low. Like a lot of these stocks can take a minimum expectation in the big picture would be the wave 3 breaks the wave 1 high before a shallow wave 4 and a wave 5 higher. Here is PayPal and Square. I think I'm going to do Shopify with this group too. But I think this is another 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. So PayPal does not have any low to trade against, so it may fall into the category of waiting for a wave 1 to develop. That's subdivided into 5 waves before a wave 2 buying opportunity against the low. I personally like to embrace the volatility and manage a lot of the risk, the downside risk and growth with this position sizing, and in the case of clean energy with straddles on ICLN. I think that's what the institutions have done. We've seen PayPal on a lot of these straddle and strangle screeners with Square Cash, with PayPal, and with a lot of some of these growth stocks. And what I expect is that during some of this blood that we've seen in the recent months, that they're using that opportunity to buy shares against their bloated put positions that they've been accumulating when they were on the long straddle and the long strangle screener around this range. So I think this is wave 1 and wave 2 at the 78.6% fib. There's no low to trade PayPal against. We'll talk about maybe some possible levels with Square and Shopify, but I think that this is one where it could be kind of that Amazon in 2009 look, where they didn't give you the 78.6% fib. They made, people who bought Amazon in 2009 or even after either wait for a low to develop or, take the risk of being called a bag holder. And I think that PayPal could be one of those where it's possibly worth the upside risk. I think there's a lot of supporting evidence for PayPal that ultimately it's going to go break this wave 1 high and go beyond this wave 1 high in the long-term cycles from some of its neighbors. So we'll talk about Square and Shop. I think Square forms a wave 1 and an ABC wave 2, and then forms another wave 1 and an ABC wave 2. At the 78.6% fib is a little deeper. Above 32, which is a little wide, that would invalidate that this is a wave 1 and a wave 2 that formed. So 32 is an invalidation level, but even that is still pretty far from the current price. So I think this is a wave 1 and a wave 2. Above 32, the length of wave 1 placed at the wave 2 low, kind of like PayPal, would give a minimum wave 3 target of about 314 before a shallow wave 4 and a wave 5 higher for Square. Here is Shopify, very similar to PayPal, almost identical chart. I think it's another very clear 1, 2, 3, 4, 5 wave 1 and now wave 2 at the 78.6% fib. They're not going to announce, they're not going to send out a PSA. There's no email list to get added to where they're going to come out and say, hey, this is it, right? This is where, 2009 occurred in tech. It's where 2011 occurred in Netflix. It's where, maybe some of those big lows in NVIDIA and Bitcoin have occurred throughout their trading history. And I think that, with Shopify, with PayPal, with a stock like Roku, I'll just be honest, I get that look. I think this is a 1, 2, 3, 4, 5 wave 1 and a wave 2 at the 78.6% fib. The length of wave 1 placed the wave 2 low could take Shopify beyond 2000. Most likely we'd have a stock split by then before a shallow wave 4 and a wave 5 higher. So do remember that stock splits exist. Stock splits do exist. I know some of these numbers sound crazy, that Shopify could go to 2000, that Roku could go to the 800s, but there are stock splits in between. Not all of them are Google's where, or Amazon's where they wait for 2000 or 3000 before the stock split. Here is a Nano-Dimension. We'll get into some of the more high-risk names for these, especially. It would be difficult to imagine managing risk with anything besides position size. But I think Nano-Dimension is kind of one of those unicorn stocks. These are really kind of the unicorns besides Palantir, which is the software stock in this sector. I think this is a 1, 2, 3, 4, 5 wave 1 for Nano-Dimension. I think it's kind of the classic, one where retail is going to end up being right. Unfortunately, they didn't get a lot of attention for Nano-Dimension until it was, close to $10, close to, $12. But The initial, yes, this is a stock that's going to be the future. It's going to change the world. That's wave one. Now wave two, it's a scam, right? Wave two, it's a scam. Wave three, I think is going to be, another one of those, this is the best thing since sliced bread. And hopefully it won't retrace the entire time, because wave three, the benefit of buying a wave two is that wave three is the biggest wave, but it's also followed by the most shallow corrective wave. Wave four is usually a lot more mild than wave two. So the big benefit, the reason that most wave theorists try to buy wave two is because it's followed by a really large wave three and then a shallow wave four before wave five higher. So what I think is that some of these stocks, the next time they go on their big, kind of multi-month, multi-year rally, they're not going to retrace all the gains or 78.6% of the gains. Typically, wave four only retraces about 38.2 to 50% of the gains before wave five. So that's Nano-Dimension. Is there a low to trade Nano-Dimension against? This low of 1.31 isn't too meaningful or useful, but I think this is wave one and wave two. I think that the length of wave one placed the wave two low gives a target of 19 and even a kind of moon boy target of about 28, the 161.8% extension of wave one. So here's space. These are the stocks that have broken below the IPO low. What I was trying to preface with NEO is that, some stocks have broken the IPO low, and that really is the big risk with trading stocks that have recently IPO'd, is that there's no low to trade against if the IPO low breaks, and the IPO low isn't really an invalidation level, which is what I tried to show with NEO. But I think for space and some of these, looking at the corrective wave can kind of still see what a possible upside reversal could lead to. I think for space, this is a wave one. Now, an ABC correction is ending wave two, where the length of wave A placed the wave B high is where wave C ends. And what these could all become, these next 3 or 4 stocks I'm going to talk about, is that ultimately they can break their wave one highs, even though they've broken the IPO low, and form an IPO base, where this is the left side of the base, this is the right side of the base. And kind of like that NEO chart at the very beginning, they've broken the wave. They've broken the IPO low, but that doesn't mean that the necessarily correct count is that now these are stocks that are just in bear markets forever. They're dead dogs. I don't think that's the case. I think space is an example of when you look at the corrective structure, we could possibly see that some of these stocks that have broken the IPO low could still be ending really important corrections before a large wave three to the upside. So that's space. Here is Palantir, Fastly, and Beyond Meat. They haven't gone too well, to be frank, but I don't think that these are dead. They've broken the IPO low, and they don't have lows to trade against, but I still think that they have the possibility in the upside risk category of forming IPO bases and breaking these all-time highs. So I think for the ones that have broken the IPO low, there's still the good possibility, and I believe the proper count is that these are wave one highs. These are wave twos that are being broken at all-time lows. We're going to begin large wave threes. For all of these stocks, because they are at all-time lows, they don't have lows to trade against. So that would be probably the big risk with these. What some will say is wait for wave one to develop to buy the wave two against the wave two low. I personally like to kind of embrace that volatility up front and manage that risk with position sizing, which is certainly something that I practice. So all the stocks that I buy in the growth sector, just to give you guys kind of a gauge of what my position sizing looks like for kind of 3 value stocks that I bought in 2021. I'll give you 3: Uranium Fuels, Camping World, and Pfizer. Those were all what I would call full positions, where they were kind of bigger positions. And then for a stock like Li Auto, for a stock like Xpeng, for a stock like Huya in the Chinese sector, each of those positions that I took were at least half of the size, even a little lower than the value stocks. So I am practicing the idea of managing risk with position size for these high beta names, and I continue to hold all of them. I haven't sold any of the growth stocks that I bought, even the ones that have broken the IPO lows, because I managed that risk up front. So here's Palantir. I think this is possibly a IPO base in the making. This could be the left side of the base. We could end wave 2 and begin a wave 3 beyond the wave 1 high. I think the same thing about Fastly and Beyond Meat. I think the critics are rightfully going to say, there's no invalidation level, and that's true. That's what I'm saying, is that there's no invalidation level for these right now. What some will say is wait for the wave 1 to develop to buy the wave 2. But I'm just trying to show in this video with these stocks that I still think that we can see IPO bases develop. and that even though they've broken the IPO low, I think that they can make long-term runs towards these wave 1 highs that they formed. So here's Beyond Meat. I think Beyond Meat is another wave 1 that formed at the IPO. Now ABC correction possibly ending wave 2, and we can see a wave 3 develop to the upside. Another one where there's no low to trade against, but we could see one develop, see a 5 waves, 1, 2, 3, 4, 5 waves impulse develop, and then the first bear trap would then be the wave 2 to buy against this low for wave 3 or wave 3. I wouldn't be betting on these. I wouldn't be, twirling my thumbs too long for these, but I do think for Beyond Meat, for Fastly, for, Palantir, yeah, they've broken the IPO low. So there's no invalidation level to the downside, but I still think that the upside risk is still there. So that's Beyond Meat, Fastly, and Palantir. Here is Novavax and Moderna. I want to get some biotech in here. I haven't talked too much about biotech, but I think that, this kind of holistically points to the idea that a big correction is ending, in the whole growth sector. I think this is a 1, 2, 3, 4, 5 wave 1 for Novavax, and an ABC wave 2, where the length of wave A places the wave B high, is where wave C ends at the 78.6% fib. So the length of wave 1 placed at the wave 2 low. If wave 2 has already ended, can take Novavax all the way to 365 for a huge wave 3 before a shallow wave 4 and a wave 5 higher. So we can see why they would have made a lot of these stocks quite difficult. And I think that Novavax and Moderna do a good job of explaining, that it might be worth it for a lot of these. So extremely tight for Novavax would be 39. And really there's not even a great low or a great high to trade against besides that. So I think that 26 maybe to 39 would be good downside levels, but realistically this is one where it's a biotech stock that could have a monster short squeeze to the upside on any type of news. And I'm not trying to anticipate the news, but I do think it's interesting that Moderna and Novavax both look ready to move together, and we're kind of taught in the kind of retail trading sphere that stocks that are competing, they're going against each other. So Novavax getting approval or whatever, that's going to be bad for Moderna. From an ETF kind of sector analysis, these are both biotech stocks. They're even in what I would call the the vaccine sector. I think there's a germ ETF, but I don't think we've heard the last of Moderna or Novavax at all. I'll make that extremely clear. I don't even think a lot of people are going to wait for the length of wave A placed the wave B high to be where Moderna ends this wave C right here. I'm not quite sure that we're going to get that opportunity, but for Moderna, this is a 1, 2, 3, 4, 5 wave 1, and this is the ABC correction wave 2. We haven't reached the length of wave A placed the wave B high, being where wave C ends. I think 90 for Moderna is, sell the kidneys levels, just to be, kind of facetious, but also to be kind of serious. This is wave 1. I don't think they're going to give that wave 2 buying opportunity below 90. If it does, I'll certainly take advantage of it. But I do think Moderna is kind of letting us know, hey, time's ticking right now in the growth sector. And this is a biotech stock that could be getting ready to explode. The length of wave 1 placed at the wave 2 low could take Moderna up to the 570s for wave 3. And that sounds crazy because that's a big number. But we could see a stock split before then. And believe it or not, the 570s in the big picture would just be the wave 3 target before shallow wave 4 and a wave 5 higher. Extremely wide stop would be 54. So for Novavax and for Moderna, for a lot of these growth stocks, there aren't really practical levels to trade against. I think that for crypto, there is evidence from some of these eCash stocks, but I use most of the direct evidence from kind of the altcoins. For Bitcoin, I think this could be a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 61.8 to 78.6% fib. I don't like to do the I'm right, I'm wrong game, but I was able to predict this massive rally before it occurred. And the reason that that's important is because that supports the idea that this is in fact a 5 waves impulse. That's one of the most important concepts in Elliott wave theory, is that this is clearly subdivided into 5 waves. The fact that I was able to predict 2 of them, kind of adds credence to that. And I still think, was I wrong to say that there was really great risk reward in crypto above this June low? I'm not quite sure that was incorrect. And we even saw one of those opportunities did lead to a substantial rally. For me, it's always defining risk and reward. I'm never trying to call the bottom. I'm never trying to call the top. If QQQ gets close to 500, I'm not going to call the top, but I'll say, hey, I think upside risk is starting to wane compared to downside risk right now. If we see some of these equal legs targets get hit, I'm not afraid to say that about crypto, but I think right now there's a lot of upside risk. The downside risk is a little difficult to define, but I'll do my best. I think this is a wave 1 and an ABC wave 2. If I take the Fibonacci retracements from the December 2018 low, we're pretty close to the 78.6% fib, 14.8K. That's a good level to be above, but it's not necessarily an invalidation level if Bitcoin broke below it. I think that when we look at Ethereum in a second, by the way, all these lines, just in case someone has a question, all these lines are found by taking the length of wave 1, place of the wave 2 low. So normally I would have both lines on the screens, but for these videos, I'm just showing that each of these wave 3 targets comes from the length of wave 1, place of the wave 2 low. I don't want someone to say, oh, that's a random line. It's like, no, it's not a random line. It's the idea that wave 3 is at least the length of wave 1 in Elliott wave. It's followed by a shallow wave 4 and a wave 5 higher. I mean, basically, the analysis of Bitcoin is something like this. Who's to say this 61.8 to 78.6% retracement isn't going to be as fruitful as this 61.8 to 78.6% retracement, or this 61.8 to 78.6% retracement. I understand, past history doesn't dictate former results or anything, but I do think that this was a clear impulse to structure. Now this is a corrective ABC, and the length of wave 1 placed at the wave 2 low says they're making Bitcoin pretty difficult because the next wave 3 isn't going to be followed, which would take Bitcoin up to 86K if it's the length of wave 1 placed at the wave 2 low. The next wave 3 isn't going to be followed by a deep retracement, in my opinion. The next wave 3 is followed by a shallow wave 4 and a wave 5 higher. So that's the benefit of buying wave 2. That's why they make wave 2 the most difficult wave, especially for growth in these high beta stocks. Here is Ethereum. Ethereum is the clear as day, in my opinion. 1, 2, 3, 4, 5 waves. And it's interesting. Not many Elliott wave theorists really argue with that. Yeah, this is clearly 1, 2, 3, 4, 5 waves. So what's this? Well, this is that 3 waves pullback where the length of wave A placed in the wave B high is where wave C ends. And I want to extend my sincerest congratulations if you made money shorting Ethereum, from this level to this level, or from any of these levels. What I can say from an Elliott wave perspective is that Elliott wave theorists are only supposed to trade waves 1, 3, and 5. We're not supposed to trade the corrective waves. A lot of wave theorists don't like, participating in that rule. But I think this is a 1, 2, 3, 4, 5 wave 1. This is an ABC wave 2. I'm not taunting anyone, but I think bears are playing with fire, shorting crypto at these levels. And I think Ethereum kind of shows this is a wave A. If I take the length of wave A, I place it the wave B high. That's right where we are right now, where we can end wave 2 and begin a massive wave 3. For Ethereum, I measured the length of wave 1. The length of wave 1 placed from the current levels could give a minimum wave 3 target of about 5.5K. Usually wave 3 goes beyond the length of wave 1 placed at the wave 2 low. Ultimately, I expect that wave 3 will go beyond the wave 1 high. We'll have a shallow wave 4 that retest the wave 1 high, and then wave 5 can be the length of wave 1 placed at the wave 4 low. So Ethereum, there truly is no level to trade against. I think it's testing this kind of wave 1 high. Some will say wait for wave 1, buy wave 2. For me, people in hell are waiting for ice water at that point. But I do think we're going to see a large wave 3 develop. Here is Solana, kind of another view of asymmetric risk in the altcoin market. It's another one where I think people are now expecting a lot of these coins are just going to pull Lunas, and I'm not sure that's going to be the case. I am reminded that, a lot of the big sell-offs, the early bear traps in crypto, were when exchanges went down, similar to Celsius. I'm not a fundamental person, but I do remember hearing a couple of those stories talking about Ethereum for a little bit, where someone would say, "Oh, I sold my Ethereum at, $14 because an exchange went down in 2016 or whatever." And I don't think they're all going to be Luna. I don't think Solana certainly is going to be Luna. I think this is a 1, 2, 3, 4, 5 wave 1. Now ABC wave 2 at the 78.6% fib. There's no asset class in the world more volatile than cryptocurrency. Above 19, we can see why. The length of wave 1 placed at the wave 2 low can take Solana on a wave 3 beyond 285 before a shallow wave 4 and a wave 5 higher. I don't have the best downside level of 19, but if we do see Solana get going, what I am pretty confident about is that this is wave 1 and wave 2. Whatever begins from this is going to be wave 3. It'll go beyond the wave 1 high. And my expectation is that we'll have a shallow wave 4 that retests the wave 1 high before a wave 5 that is at least the length of wave 1 placed at the wave 4 low. So in the big picture, I know it sounds Looney Tunes to say this right now, but I do think there's a path that takes Solana to the 500s, and one of those kind of Elliott wave principles you get from studying, the fibs a little bit. These deeper corrections lead to more explosive rallies. Okay, and one of the evidences for that is that some Elliott wave theorists, they don't use the extensions from the impulse waves, right? So they're not taking the length of wave 1 and placing it at the wave 2 low. They're measuring the depth of the wave 2 correction. They're measuring the depth of the wave 4 correction. And the deeper that correction goes, the further the inverted extensions are going to be. So I think this could be another case for crypto where these deep corrections are going to have deep price targets in the future. For wave 3, here's Litecoin and Ripple, everyone's favorite cryptocurrencies. Litecoin, man. What a bummer. Anyway, this is wave 1 and wave 2. I think this is a big wave 1 that formed from this low, and a wave 2 that ended at the 78.6% fib. The only time that I broke my position sizing rule, oh man, I'll say it. I bought Litecoin and I took a little bit more than a half position size in the 220s. Okay, so I have been holding this whole time. It's not some devastating thing. Like I said, most of my money is honestly in the boring stocks that most people reading or watching these videos and reading my tweets just kind of ignore. And I say that because I can see how many likes and how many views and whatever. Most of my money is in the low beta, boring dividend payers, in the value sector especially. But when I do go in growth, I take a half position size. I got into Litecoin around the 220s, and I've been holding it. I still don't think, it's a lost cause, but I did have a retail moment. I'll be honest. I think this is a wave 1 and a wave 2 at the 78.6% fib. I think Litecoin holds 24 to 22, and I think this is 1, 2, 3, 4, 5 waves. I ultimately think I'm going to get to sell at least a little bit of my Litecoin bag beyond this wave 1 high of 412 before a shallow wave 4 and a wave 5 higher. So there are winners. All right? I think bragging about the winners is lame. I think it's cool to brag about the losers. That's you start bragging about the losers, I'll really see what you have to say, because that shows me you've been around for a little bit. Here is Ripple. I think this is a wave 1 and a wave 2. I think this is a large wave 3. So just so it's clear, this pitchfork comes from the weekly chart connecting the beginning of wave 1 with the high of wave 1 and the low of wave 2. I think a wave 3 of wave 3 is in progress, and we're going to see ultimately the median of this Andrews pitchfork gets hit. So this isn't just here for funsies. I think from this low, Litecoin. I'm still thinking about my Litecoin bag. Anyway, Ripple forms a wave 1 from this low that occurred in 2020, not to brag or any of that crap, but this is, a 600% rally that I predicted with Ethereum and Bitcoin. That just hopefully adds a little bit of evidence that this is in fact a wave 1. This is an ABC wave 2, the 78.6% fib. And I'll just be honest, I'm in the Ripple cult. I'm in the Ripple cult, and I don't care, baby. XRP community, I think we're going all the way to the 161.8% extension of 3. We'll probably blow past that before a shallow wave 4 and a wave 5 higher. Ultimately, I think Ripple's going to go all the way to the median of this Andrews pitchfork, found by connecting the beginning of wave 1 with the high of wave 1 and the low of wave 2. First, we're going to go to the lower bound. In my opinion, we'll go to the median next.